What's up, everyone? Welcome to this week's pre-week analysis session here at V2 Trade. And let's dive straight into it. I'm very excited for this week, and I'm very excited to see how this will play out. This video is coming out here on Monday because today is a market holiday, as you can see right here, as it is Memorial Day. So we basically cannot trade today, and the week actually essentially starts tomorrow on Tuesday. So we upload this one day before the market opens, and we will be recapping all this previous action to see and make some predictable outcomes that we hope to see happen in this upcoming week. And depending on that, we can potentially make some setups based on that and get ourselves set up for the overall week. So let's dive straight into this. And the first step is obviously going to be to overview the news and set up some guidelines of our trading with news as necessary. So we use Forex Factory and Financial Juice. So today was Memorial Day, so it was a bank holiday. Nothing there today, so no trades today. But tomorrow, during New York session, we do have CB consumer confidence, but that's essentially it. When I double check on Financial Juice, I see CB consumer confidence at 930 and Dallas Federal Manufacturing Business Index at 930, but that shouldn't be too big of a deal. So I'm mainly worried about this US CB consumer confidence. So definitely a 5-minute interval that will be taken there at 9 a.m. Central Time. And what this 5-minute interval is: no trades starting 5 minutes before the news event, and no trades until after 5 minutes of the news event's release. So that's essentially the news recap for Tuesday. On Wednesday, we do have Richmond Manufacturing Index and FOMC later in the day. And when there's FOMC, we typically don't trade because price may not provide the best action, as the market is waiting for FOMC to make its actual move. And because of that, the price may not move how we want it to. So Wednesday is likely going to be a day where we're sitting passively and where we likely don't take any trades at all. But if there's a very good setup, we won't hesitate to pull the trigger on that. And on Financial Juice, it's the same thing. On Thursday now, we see that we have pending home sales at 9, natural gas storage at 9:30, and crude oil inventories at 10 a.m. We don't really have to worry about FOMC members speaking as long as it's not Mr. Jerome Powell. So looking here, 5-minute interval at 9 a.m. and depending on what Financial Juice says, maybe 5-minute interval at 9:30 and 10 a.m. as well. That's where Financial Juice comes into play really nicely. And U.S. initial jobless claims. We do have unemployment claims as well on Thursday. So Thursday does seem to be a pretty news-heavy week or day, essentially. But what I'm seeing is I think that a 5-minute interval may not be necessary for any of this news. Potentially at 9:30 because it is a fast release. But other than that, during market session, the news events are not too significant. And we do need to be aware that there is jobless claims at 7:30 a.m. prior to market open. So keep that in mind. And if I'm thinking right, Friday we have University of Michigan, I believe, consumer sentiment, and correlated news like inflation expectations. So nothing too significant. 5-minute interval should do on Friday. Lots of news at 7:30 though, with PCE and Canadian GDP and more stuff of that sort. But yeah, 5-minute interval at 9 a.m. should do the case on Friday, and on Thursday, be careful and take a 5-minute interval at 9 a.m. So overall, this week is a pretty typical week with news. It's nothing too significant. We just have to be aware that we do have a FOMC here on Wednesday. So we do want to be careful trading on Wednesday and see how the market reacts here on Wednesday. But that pretty much should be all for the week and news analysis. So now that we know there's nothing too significant, we can get into our technical analysis. So let's start on NQ and then go to ES. So let's get straight into that. So as you can see in the recent time frame, we did see this large spurge down after Trump had introduced his tariffs. Now we are starting to head back up, breaking structure here and here towards the upside. So we're in that recovery phase, recovering from all this tariff news that the market responded negatively to. But now Trump has been initiating a lot of his projects and more that are helping move the market upwards, and deals between other countries regarding tariffs has also been moving price upwards as well. That 90-day pause is the reason for this big move right here that we saw. But other than that, that's the main context regarding this recent move. But what I want to do is just mark out our main levels here for the week and see where we may react from there. And we'll also be seeing where most of the volume has been transacted as well to make some predictions of that case as well. And what I'm seeing here is price has been going up till these highs right here, and we had 3 taps onto these highs, 1, 2, 3, and we are unable to break through those highs. And after that, we have started making a move towards downside, which we then reacted from these lows. So do keep that in mind as we move forward with our charting. And it does seem like we did seek some reaction from these lows. So what I'm doing right now, I'm just marking out all the main key levels that I'm spotting here on the market. We do look like we're making a dip down again on Asia session, which has recently started, but we're coming into this section in which price may move upwards until, but really New York session tomorrow will be the determining factor of all of that case. But we'll go ahead and mark this gap fill, this as well, and this as well. Those could be areas of the gap fill where price may react. And let's keep going. Just marking out all the things that reasonably might happen in 1 week, even the potential extremes as well. And remember those 3 touches that we've seen before? If we take a look, what does that align with here, guys? It aligns almost perfectly with this 4-hour supply zone that we saw on the 27th of February this year. So that's pretty interesting and good to hear, good to know. I'm just gonna mark out until these highs right here because it does not hurt and it's always good practice to mark out. It's better to mark out more than less to a certain extent. So we are going to practice that. And this was only on the 4 hour. And there was a lot to mark out here. So it's great to hear. And 4 hour is always considered min liquidity. Here at V2. 3 hour not seeing much different, but this recent week, starting from Tuesday of the week, has been very, very choppy. Price action has not been the greatest this past week, as you can see right here. We've just been chopping, and preferable trending price action has not shown itself as we would like it. That does make me think that this upcoming week may show us that trendy price action that we may have been seeking, but that's just a prediction. We could continue to chop, but I personally am thinking that we might head into a more trendy market, seeing that as the week has progressed, price has gotten these spikes of volatility, which, looking at how this week has started, does look like we may be in for a decent week in regards to price action. But yeah, what I'm seeing here as well on the 2 hour is pretty good because we are seeing a 2 hour demand zone here, which could push price upward, seeing that we are on an uptrend in the higher time frame. That's a pretty aggressive move to the downside. That is a pretty aggressive move to the downside, but I want to see if there's a 1 hour there to mark instead. And we do have that 1 hour. 1 hour. And we will mark the liquidity as well. Yeah, this is depends where we break out of this range really with price action. Nothing looks too insane from where we're sitting at right now. We easily could head towards the downside. We easily could head towards the upside as well. We do have another 2 hour demand zone right here. Now that let's head on to a 30-minute just in case, see if there's anything else there. We do have a 30-minute supply zone there. Pretty evident as well. 30-minute. And that's pretty much it for the charting and the technical aspect of it. Now, from what I'm seeing is simply that price needs to find its direction. If we break through this demand zone right here, we easily could push down below and potentially even head down towards this relative area where price may find more volume at that area. But if buyers start to come in here at this level where we're sitting at right now, we may make a move upwards, testing into these two zones right here. And if we can break these zones, then we are in for a ride likely until these zones, which likely would get broken through as it would be the fourth tap into that area. And the more times you tap into an area in a recent time frame, the more chance it is to break through. It's showing that although we may head down for a bit, we may still want to head upwards and actually break that area. But to support all of this, let's go ahead and check our volume profiles through a variety of ranges and see how we react. Let's first go ahead and see a volume profile in this chop action. And as you can see the volume that we have been getting has been throughout all this chop that we've been seeing. Lots of volume in this chop area and decent volume around where we're seeing our lows as well. So this area is definitely defendable, and honestly so is this area as well. Price has been seeming to show that buyers and sellers are in unison at fair value here at this price. But it's honestly not showing me too much. It's showing me that it's showing me the same thing that we saw with simply the zones. So let's go ahead and extend this to the lows. And what we see there is same thing as prior as well. We see that here at this area, which correlates to that area, we're seeing volume. And same with this choppy action there, we are seeing high volume. So depending on where we break out in these recent zones determines if we head towards this area or towards this area for the next tap. But again, not showing me too much. So let's extend it to those highs. And what I'm seeing is lots of volume is being transacted down here, but from where we're sitting at right now, we still are generating volume to defend ourselves up here, also up here as well. So that could potentially find support to help us get towards the upside, as momentum and the trend has been trending towards the upside. And we do see high volume up there as well. And since I've done pre-week here so much, that has been a very significant area. The more I extend it, the more volume we get up towards those highs. Just look at how this volume lines up with what we're seeing, right? Lots of volume here at these highs. If we break those highs, we can head likely towards this high, because look how much volume this one level has compared to any other level. We see an insane amount of volume here, but that doesn't align with any of our levels. And we have volume actually supporting us moving towards upside. But simply at this one level, we're having lots of evidence that price may want to head there, and that's a significant area that price may want to test. But honestly, same thing. We're going to need a breakout towards either side to determine any of this. And that's honestly how it's going to look on NQ. So what my predictable outcomes are going to be is simply going to look like this. Depending on how we react here, we may either head towards downside again, or we head up towards this area, or we see a reaction at this area, we either head towards the upside, or we head down towards this area. But that's essentially what I'm looking for. It's pretty evident as to what may actually happen. Is depending on what we see, we should be able to capitalize off of such. So these are what I'm predicting looking at NQ. Let's go ahead and take a look onto ES as well. And let's get started with this. Let's just start marking the main liquidity levels that we're looking forward to. Looks like that has already been filled, so I'm not marking that. I won't be marking too far down, too far up on ES, as we do have significance on NQ, but I will mark to a decent extent for the purpose of analysis. That should be a decent extent. Now let's see if there's anything near these highs. We do see a nice 4-hour supply zone, which we will be marking out. And we'll go until the highs as well. Oh, pardon me, we actually had broken all these area on NQ, I mean ES. I thought that this where price is at right now was the line that we had marked out, but our line which we had marked out is actually up here. The area that we have to mark is all the way up here, which does diverge from NQ, so keep that in mind. And there's always lots of volume here at these highs. Oh my. There we go. And there we go. I will mark out this one main zone that I see for our. But there are the liquidity levels on ES. Let's go ahead and go down to the 3 hours, see if we spot anything there. We do see a supply zone. I am tempted to mark that out, and I will be marking that out for pre-week analysis purposes, but typically I'll have that marked off when I'm live trading because that is a pretty big zone. Just for analysis, we have it marked out so we have good evidence within the market to prove our analysis. But nothing too much that has been added here on ES. 2 hour, we do see this evident zone right there, which is good to see. And we do have this 2 hour zone as well. On the 1 hour, nothing extra. There is a zone right there, which I will mark out. How it's looking like so far is setting itself up to look very, very similar to how our NQ analysis was. So do keep that in mind. I will move this up to here. Simply drag it upwards to make it thinner. Nothing else too much I'm noticing there. But what I'm seeing is the same as the NQ. Depending on how we break. If we break towards the downside, we can head down here. If we break towards the upside, we can head up there. That's what I'm looking for. And that is with the inclusion of our V2 levels, right? Because what I mean we can head down there, it doesn't necessarily mean that we're always going to head down to our 2 hour zone, right? We can easily head to our V2 levels here, which does align with the larger frame area of interest, because that 0.75 and 0.618 levels align with the top wick and upper half of the candle that actually determines the zone. So V2 could definitely be an area of retracement as well. So we potentially may, if you break down, may come here and retrace back up or continue moving down. Definitely an area to seek and see how price reacts there. But like I mentioned, literally same exact opinion and analysis from what I'm seeing on yes, potentially the volume profile may give us some additional insight. So for this recent range, what I'm seeing is that volume is transacted down here, which is similar to that lower area, that liquidity. So potentially what may happen is this liquidity may get swept, volume starts pushing in this higher time frame fair value gap, in which we see movement back up. That definitely seems very feasible in the context within the market and seems feasible within the market mechanics as well. Definitely something to keep in mind. But I'm liking how point of control is towards the upside and majority of that volume is towards the upside. I am leaning towards upwards move, potentially even with chop at that level, but from where we're at right now, seeking more upside action, but not guaranteed upside action. We very well easily could be mistaken and price could head downwards, in which we are still prepared, which is good because there is a good amount of volume being traded down here at these levels. Nothing too significant I'm seeing though. Still volume is up here, volume is being generated up here. I do want to see reactions from this lower level coming back up. Lots of volume here at these highs right here. Lots of volume here up at these highs as well. And lots of volume here. So, honestly, going to be the same exact things. Price definitely looks like it's trying to find a direction and next target to head towards. And depending on where we break out here, shows us where price may want to head towards next. What I'm seeing is that our main targets can be this upper area of interest with the liquidity and the zones, and this lower zone and liquidity as well. Those are going to be the main targets, and those are what our preferable outcomes are going to be based off of. So what I hope to see happen is that we head down towards those V2 levels, which I will have marked out. And from that area, we see upwards action or downwards action. But even better than that would be we start to see upwards action from here, seeing a reaction from here, determining if we head up towards the upside, up to that general area, or simply towards the downside from that area. This is going to be my final preferable outcomes case here for this week. It's definitely feasible for price to head upwards towards this area or head downwards towards our lower liquidity down there as well, or even this area as well. But I would definitely prefer to see some sort of upwards action in the first half of the week. But with these events like FOMC and unemployment claims, anything could change at any time. So we do have to be aware of that. But for a final step, let's go ahead and see if there's any edge that we can find on the VIX. And looking from where I'm sitting at right now, it does look like the VIX has made another leg towards the upside, in which we clearly saw rejection from that upper wick, in which I'm carefully monitoring. But I do like how there is a supply zone here, and we don't mark supply zones on VIXs. Honestly, that makes no sense. But it's just showing and giving us some ideas as we're priced to get towards next. And from looking at where we're at right now, if we can start to make lower highs and lower lows, I definitely prefer that move down on a VIX, which is bullish for ES and NQ. But if we are unable to do so and head up to here, I definitely want to see reaction there. If we break through, bearish for NQ and ES. But definitely favoring the move downwards on the VIX, meaning preferring the move upwards on ES and NQ. But that's pretty much it for this pre-week's analysis. To recap, from what we're seeing right now, price is trying to find its target and what to head towards next. And some preferable outcomes is that from where we're sitting at right now, from this demand zone, we see movement upwards, and depending on the reaction from the upward supply zone, if we break through that, we can head upwards towards this area of interest, or come back down where we have to monitor the reaction to the current demand zone, or we simply head down from here towards our V2 or demand zone levels and seek reaction from that area. But throughout all of this, from what I'm seeing on the VIX, NQ, and on ES, I am leaning more towards a bullish outcome rather than a bearish outcome, without the consideration of news outcomes, as news outcomes could change anything at any time. But that's all I have here for today. If you have any questions regarding anything I have mentioned here today, please feel free to join the free Discord server. The link is in the description down below. Everything is completely free, and there are lots of resources and that could help you out if you're starting to trade. I will be responding to questions there, and you can hop on the Discord journaling program, in which community members and myself can help you evolve as a trader, all for completely free if you take advantage of it. Additionally, you can also leave a comment down below. I'll be more than happy to answer your questions there as well. Now, that's pretty much it here for today. I'll see you guys next week, Sunday or Monday, for the next pre-week analysis session, depending on when market opens. And I'll see you guys tomorrow for the market analysis or trade recap session as well. I guess I'll see you guys then. Have a great day. Goodbye.